Okay, let's go ahead and accept that. And the midterm, just taking, it's really our only exam. We keep calling it a midterm. The exam probably would be a better way to describe that, is going to be next week. Okay, now it says 9:15 there, but I want to talk a little bit and see how you guys feel about setting it up this way. So I'm thinking that the way for us to do this exam would be, yes, open it, and I will open it on 9/15/2021, of course. Okay, that will be 9/15 on 2021. That's a week from today. And I will open it at the start of our class time, which of course is 6 p.m. And then it'll stay open. And what I'm thinking is I'll leave it open the entire week. It'll stay open until, and then I will close the exam at 5:59 p.m. Okay. Good to see that I haven't lost the first grade version of myself. 5:59 p.m. Okay. And that'll be on 9/22/2021. So in other words, I'm going to leave the exam open for an entire week. And what I'll do is I'll leave it open for 3 hours. You'll have 30 multiple choice questions, MCQs. Yeah. 30 multiple choice questions. You'll have 3 hours to work those. So what that means, if you did something crazy like not start the exam until 4 o'clock on the 22nd, you're not going to get the full 3 hours. Okay, it'll close automatically on you at 5:59 p.m. But I think that helps you to schedule a time during that week-long period that fits with your schedule. Set aside 3 hours. Maybe you wait until Saturday, let's say. Oh, wait a minute. Yeah, we don't have a class on Saturday. So maybe you wait until, it scared me for a second. Maybe you wait until the Saturday class are kind of annoying, but maybe you wait until Saturday to take the exam, and then you get it out of the way, and then we'll answer any questions about the exam when we start class a week from tonight on the 22nd, first day of autumn. And then we will proceed in, I think chapter 4 is up next. What do you think? Does that present a problem or a concern?
It sounds fine, but on the syllabus, it says that we have a Saturday class on the 18th.
We do?
Yes.
Shit. Okay, these Saturday classes are so annoying. Yeah, you're right. Okay, so thank you. So that means that we can't do that. So now I have to close the exam on 9/18. What time is that Saturday class?
I believe all of our Saturday classes are 9 a.m. to 1 p.m.
9 a.m. Okay. So thank you. Where is that? Just to confirm, just so we're all on the same page.
It's on the master list. Oh, yeah, right there.
9 a.m. to 1 p.m. Okay, so that means that I'm going to have to, unfortunately, guys, it was sounding great for a second there, but maybe that's better anyway. 9:18, and I will close it at 8:59 a.m. Okay, so it doesn't quite give you a week, but it does give you time next week, right, to schedule the exam, and it gives you, it doesn't hurt me though, rather than do it at, to give you a full week, and I'm sorry, I just forgot about that Saturday class. Why don't I open it just because it's easier for me to remember? Instead of 9:15, I'll open it at 12 a.m. That's when the sun is still dark, dark outside, right? 12 a.m., 12 midnight on 9/12. So 9/12 is a Sunday. So that gives you nearly a week. So we're back to giving you a week. I'll just open it on 9/12 then. Yeah, okay, that works. So I'll open it on 9/12. That gives you almost that whole week still to work it. You got to work it sometime during the 3 hours, those 30 multiple choice questions. And then on that Saturday, then we'll go through the exam and whatnot, and then we'll start chapter 4 on Saturday. How does that sound?
So does it, just to double check, does it mean we don't have class on Wednesday?
Correct. You would do the exam during that week. You could schedule your exam for 9:15 unless you guys want a class. I don't care. You want a class on 9:15? Because if that's the case, I'm going to close it on 9:15 at 6 o'clock.
No, thank you. We're going to use those 3 hours to do the exam.
Can we move that Saturday class to Wednesday and not have Saturday class?
No.
Oh,
Are you kidding? No. They're just trying for me to make a mistake like that. That I can't do. I'd like to, but no, they won't. That won't fly. They're kind of, in love with the schedule, right? They have classes on Saturday. If I do that, that's taking way too much of a hatchet to their plan. We can have class on Wednesday if you want, the 15th. I'll just have to close the exam I'll open it. I can open it. I'll still open it on that Sunday. And then we can have class on 9:15 if you want.
yeah, I'm okay with having no class on Wednesday on 15th. That's perfect.
Okay, so we have somewhat of a consensus then?
Yeah.
Okay, so we will do this. So that means the answer to that question is yes, we won't meet 9:15. That might be the time that you schedule the exam, right? It'd be like as though we had an exam in class that day, right? So you can, but I'm just saying you can take it any time, within that week. So you don't have to take it on 9:15, but you could take it on 9:15, act like that's your, class time, like as if we were taking the exam, say we had a live class. You'd come in, you take the exam at 9:15 at 6 o'clock, it'll be open. You take your 3 hours, you finish the exam, and then we come back on Saturday. Okay?
Sounds good.
So I need to get rid of this 6 p.m. Doesn't make any sense here. So take a picture of that. That's the deal here, guys. Don't, I almost said it. Don't mess this up. Don't F this up. Okay, make this work. Okay, and I know you guys are MBA students and you're ahead of, you know, what introductory students will do sometimes. You know, undergrads will say, I forgot to take the exam, and they expect me to jump around on one foot and help them, and I'm not inclined to do so. So just make sure that you take the exam sometime during this window. Okay?
Okay.
All right, guys, good. Where is everybody? Okay, I'm missing a couple folks, so I'll have to make note of that because, again, attendance is part of this program. So I'm trying to make it as flexible as possible, but I can't have people just blowing off the class either. So, okay. Question. Someone says they're stuffing their face. That's fine. I don't mind if you eat dinner during the class.
Are we going to go over the breakdown for the exam? Like how many questions are from each chapter?
No, because I can pretty much tell you it's going to be chapter 2, chapter 3. And I kind of consider chapter 2, chapter 3, you know, journal entries, applying journal entries to accounts, knowing how the journal entries affect the different accounts. So if you get, if you're good with the, what I will tell you is I'll give you a list of documents that I think you should be paying attention to. I'll do that right now. Okay, so documents. Okay, when I say documents, I don't mean pages. Okay, so a document may be a couple of different pages, you know, maybe 5 pages, but I'm just counting it as a document. Okay, so documents for the midterm. One is going to be the let me put this, I don't know why I'm doing this to myself, put it in a tablet. And why would that be? Why would it change my default microphone? What would be the reasoning for that? Okay, would there be? I don't know. Okay, absolutely no reason on earth for my camera to stop working, none. Okay, okay, good. You can see me, you can hear me, right? Okay, all right, good. I hate this computer. Okay, so chapter 2, red, blue arrow slide. That talked about debits and credits. Okay, document 2, chapter 2, chart of accounts. Okay, chapter 3, document 3 is going to be chapter 2, year 1, year 2 example. Remember we did the DJ Pizzazz thing and we went through and we posted all the different journal entries, etc. Okay. Document number 4 is going to be practice midterm 1, or I guess I'll call it the first practice midterm 1. First practice midterm 1, which we went through last time. Document number 5 is going to be second practice midterm 1, which we'll look at in class tonight.
Wait a second. I think the first practice midterm, I could have sworn we didn't go over that, did we?
We went over practice midterm last time. I don't know if it's the first or the second one.
The first one you said we was going to go over the second one today.
Stop, guys. There's 3 practice midterms. Look at all of them. And we're going to go through a couple of them tonight. I don't know which one is which. Okay. Third practice midterm. I don't care how I've ordered them, but whatever, however I've called them. There's 3 practice midterms, and I'll show you where they are on campus in a minute. Look, you need to be good at all 3 of them. Okay, 7th document, I guess I got to go up here. Okay, 7th document is going to be chapter 2. Practice midterm, which I'm putting as PM. 8th document is going to be the chapter 3 practice midterm. Okay. And again, I don't know when we went over them. We'll by the end of tonight, we'll have gone through all the practice midterms, the ones that are specific to the chapters and the ones that contain questions from chapters 2 and 3. And I don't know, we did the first one last time and the second one, I don't care. But that's what we're going to do tonight. We're going to go through those 2 practice midterms right there. The rest of these we've already gone through. Okay. So if you need a study guide, it's basically these 8 documents. I reckon it would help you just to make it a nice 9, 10 documents. You could say the chapter 2 slides and the chapter 3 slides could also be helpful. And of course, well, I don't know that we have lectures for all of those because they don't let us record the live lectures, but there's lectures for some of those as well that you could look at. Okay, so that makes it a nice even 10 documents. So this is kind of a long way of saying chapter 2, 3. I'm not particularly interested in having you go through a bunch of chapter 1 stuff. So chapter 1, and again, I'm saying the slides again up here, but those 2 pages within those slides, absolutely the chart of accounts, the debit credits, got to know that. The chapter 1, year 1, year 2 example, there's also a clean version of that. So you can kind of go through and do that on your own. I think I recorded the video of that, so you can kind of stop the video and work it that way. Chapter first practice midterm, whatever it was, the one we went through last time. 2nd and 3rd practice midterm ones, which we'll do tonight. And then chapter 2 and chapter 3 practice midterms, and then the rest of the slides for chapter 2 and 3. Okay, question?
Is this the type of exam in which you cannot go backwards on a question?
No, it's not. You can go backwards, you can go forwards, you can skip questions and come back, but do all that within 3 hours.
Okay, thank you.
Do your own work. Do your own work. These documents in front of you at the time that you're doing it is fine. Going out to, you know, this Chegg or wherever the hell these people are that put together these websites, that's not okay. Course Hero and all that nonsense. These documents, you have them in front of you. You know, don't wait, you know, print all these out and say, okay, now let me figure it out, because you're going to get stuck in the 3 hours that you're given. You're given 3 hours, set aside 3 hours. There's no benefit to saying, hey, I'm supposed to take my accounting midterm, so, you know, the thing's going to start at 6 o'clock, so I'll see you at, you know, 6:40 up in the club or something. You know, there's no advantage to that. Just take your time, set your 3 hours, be prepared. You know, you don't have to take the whole full 3 hours. I don't know that you'll need a whole full 3 hours, but there's no reason to try to shortcut this and end up messing yourself up somehow. Should be a pretty easy test. Question? Okay, good. Geez, I'm already tired. We haven't even looked at any of the material yet. So if there's no question on any of that, then I am going to go through, and I don't know how I labeled this, guys, if it was the first or the second. It's this one that starts out with this Tara Westmond. We didn't go through this one last time, right? Okay. So go ahead and let's take a look at this one. Okay. And this is pretty much how your test is going to be. Okay. It's going to be multiple choice questions. These come from previous exams that I've retired now. And so there's no reason that you should be shocked when you see a question like this on your exam, right? Okay. So we want to know in this question what the, and let's see if they're going to give me a hard time. Let me draw what the retained earnings, okay, account before closing had a balance of 297. What is it after I close everything to retain earnings? And so I'm going to give you my favorite little symbol here. This is the piggy bank, isn't it? Okay. And how do we figure out the retained earnings?
Is the beginning balance.
Good. We're going to use BASE, good, base. And the beginning balance they gave me as what?
185.
No.
Oh, no.
It says retained earnings had a balance before closing. Remember, we have to close our net income to our retained earnings to get the ending balance. Okay, so the beginning balance is what?
297.
Good. Okay, and then what do we add?
The net income.
Good, we add net income. And so, and the way I do these, guys, sometimes I get students want to, you know, kind of do it the way this is doing it. You know, and of course I'm an accountant, but I just go ahead and I make myself up a little what? A little income statement. Why do they call it the income statement?
Because it reports the net income.
Good. So I have revenue of 185,000. And you're gonna have 3 hours to do these questions, guys. There's no sense in trying to stress yourself out, come up with little shortcuts and stuff. Just go ahead and do it the long way, the way we've been practicing, right? Good. Then what do I do? Net income is revenue minus
expenses.
Good. Minus expenses. So my expenses were what? 103,700?
Yes.
Good. So my net income here, just kind of squeezing it in, is what?
81,300.
Good. 81,300. So I have to add that. And then what do I subtract?
Dividends.
Good. Subtract the dividend, and they tell me the dividend here is
18,000.
18,000. Good. So my ending balance, the answer to this question, I hope, or I'm going to have a lot of explaining to do, should be what? 360,300?
Yes.
Okay. Question? All right, good. Good work. Okay. Okay, let's go ahead. Let's take a look at this next one. A company had revenues of 75,000, expenses of 62. The company paid an $8,000 cash dividend to the owner. Which of the following entries could not be a closing entries? Now look, guys, a question like this is trying to pull you into a trap that goes against everything that we've worked for, everything that we've trained for. Okay, they're trying to take you out of your training and trying to get you to start trying to go down some path that's going to do nothing but mess you up. Okay, what you do is you go ahead and you make all the closing entries and then compare it to the choices, and that makes this an easy question. Okay, so how do we close our revenues?
Credit expenses.
Okay, well, that won't close revenue. How do we close our revenue?
Sorry.
Debit.
Debit revenue.
Okay, good. Debit revenue. You're on the right track. Debit revenue. And they told us that the revenue was what? 75,000?
Yes.
And credit. I'll give you a hint. The credit's also going to be
Income statement.
good. Credit income income summary is the name of the account, not statement. Income summary. Okay, and so I'm going to go ahead and I'm going to tee up income summary here. Okay, so that's a credit of 75,000. So the balance in the income summary is 75,000, right?
Mm-hmm.
Isn't that it? Okay. Okay, good. Who said they wanted the credit expenses a minute ago?
That was me. So credit expenses 62,000 and then debit income summary 62,000.
Good. Very good. So we're going to credit income expenses, I should say 62,000. And we're going to debit the income summary, right? Good. And when I debit the income summary, 62,000, I should get what over here in my balance?
13,000.
13,000. Okay, good. So now my income summary has a balance of 13,000. Okay, so that's my net income, isn't it? And my net income is stuck in income summary. It says, help, can you give me a ride? And where does it want to go?
Retained earnings.
Good, it wants to go to retained earnings. So what am I going to do? I'm going to debit income summary for 13,000 and credit what?
Retained earnings.
Credit retained earnings, that's where it lives, right? Okay. And so when I debit income summary 13,000, that zeroes that out. I always have to zero out my income summary because I need it to start at zero to start the next year. And I credit my retained earnings, just posting that over here is 13,000. And now I need to what? Close my, what else do I need to close?
Dividend.
Good. When they paid the dividend, this is not a closing entry, guys. When they paid the dividend, they debited dividend for 13,000 and credited cash, right?
8,000.
But now they want
8,000.
huh?
Dividends for 8,000.
I'm stuck in our in-class example. It was 13,000 and I got 13,000 in my head. Right. And then I have to close the dividend account, don't I? So to close the dividend account, I'm going to debit what? I want to turn it to zero.
Retained earnings?
Yeah. To subtract from retained earnings to reduce an equity account like retained earnings, you debit it. So it's a subtract from retained earnings. Good. I debit retained earnings 8,000. What do I credit?
Dividend.
Credit dividend to close it, right? Okay, so now dividend, if you were to tee that up, and I'm just kind of co-opting this space down here in the next question. I did what? I debited it there. I credited it here. Does it have a balance of 0 now? Which is what I want because I keep track of my dividends by year. Right? Okay. So now when you look at this, okay, ignore this one, but I have all my closing entries. So they want to know which one would not be closing entry. Debit income summary for 13, credit retained earnings. Okay, that's not the right answer because what? That's sitting right there, isn't it? Okay. Debit income summary 75,000, credit revenue. You can see that's the right answer because I don't do that. I do what? I debit revenue, I credit income summary. Okay, so that's not the right answer because I do make that journal entry. Debit income summary, credit expenses, I did that right there, so that's not right. Debit retained earnings, credit dividends 8,000, I did that, what, down here into the next question. Okay, borrowed that space down there. I did that, so B is the correct answer. That's the journal entry I don't make.
Can I clarify something here?
Yeah.
I mean, I think I probably misunderstood, but did you say zeroing out dividend is not considered a closing entry, or it is?
It is.
Okay.
This is the closing entry. Paying the dividend is not a closing entry. That's why I crossed it out.
That's what I misunderstood. Thank you.
Yeah. Mm-hmm. Question? Okay, good. The most important thing, guys, I'm not trying to turn you into, accountants that'll be standing there sweating over closing entries, at the end of the quarter or something. The point is that you understand the relationship really between the balance sheet and the income statement, right? Revenue minus expenses gives us net income. Net income gets to the balance sheet through the closing entries to retained earnings. And then dividends don't affect the income statement. They go directly to the retained earnings, right?
Yes.
Okay. And, say, well, do we really have to go through all that to understand that? Yes, because I have CPA exam candidates that don't quite feel the relationship between the balance sheet and the income statement. And for an accounting CPA instructor, that's very disconcerting to run into folks that, are getting ready to get licensed to be an accountant. They can't tell me how how stuff from the income statement ends up hitting the balance sheet. So I'm going to expect you to understand that. Okay. Okay, good. Let's go ahead. And they ask us here, after closing entries, what will be the balance in the retained earnings account? Who wants to set that one up for me? And when I ask you that, it's not because I don't know how to set it up. Sometimes students, I think, say, oh boy, he doesn't know what he's doing. Don't help him. Let's just watch him struggle. Who wants to set that one up?
I can try.
Okay.
So we're going to use the base, BASE.
Okay.
And the beginning balance is 130.
Okay.
And then we add the net income, which is 42,500.
Good.
And we subtract the dividends.
And that gives us, I guess, 160,500.
Yes.
Right.
Yes.
Yeah. Okay, good. Okay, good. Now, sometimes students will say, well, how was I supposed to know what to do with it. It just says retain earnings. How was I supposed to know that that's the beginning balance? And I'm always like, try to get the answer without doing that. Try to get the answer without including, you got to add net income, you got to subtract dividends. You can't get, I used to have to go to this place called Parkersburg, West Virginia. Parkersburg, West Virginia is where the Office of Public Debt Accounting exists. And so you follow all the auction and issue of the securities through New York City, and then you end up in Parkersburg, West Virginia to witness the actual accounting of that. So people say, well, where's Parkersburg, West Virginia? And all I can tell you about Parkersburg, West Virginia is you can't get there from here, okay? So you can't get to that answer without starting with this 130,000. Okay. All right, good. Hang on a second, guys. I got to do something real quick. Okay, the days are getting shorter. Okay, question. Okay, good. The retained earnings account had a credit balance of 37,000 before the closing entries are made. Total revenues. What is the closing entry for the expense accounts? Now look, here you don't necessarily have to make every single journal entry that constitutes the closing entry, because they're just asking you about one, right? Okay, as opposed to which of the following doesn't belong. They have to make all of them to find the wrong one, right? Here, I know that to close my expense accounts, I'm going to do what?
Credit income summary.
Credit income summary?
Debit, sorry.
What do you want to do to close the expense accounts? That's all right.
Credit the expense account.
Good. Credit the expense accounts, right? What is the amount of expense here? 39,000.
39, yeah.
Okay, good. What do you want me to debit, Jerome?
Income summary.
Debit income summary. $39,800. Good. Okay. Is that choice A? Okay. So that's all you had to do for that one. You don't have to make all the journal entries. For one that's just asking you, how do you close revenue expense? If it's just asking you one thing, okay, then just make the one entry. You still make the whole entry and then compare. Don't fall into this trap of, looking at the choice and going, let me see. That violates your training. Your training is to understand the nature of the transaction, make the journal entries associated with it, and then look at the test questions choices to get your answer. Okay? Okay, good. Number 5, the company paid a $35,000 cash in dividends. Paid $35,000 cash in dividends to the owner, Jen Rogers. The entry to close the dividend account. What's the entry to make the dividend? To pay the dividend, I should say. Not the answer to this question.
Debit, dividend, and credit cash.
Good. Debit, dividend. I'm going to abbreviate that div. 35,000, and I'm going to credit cash 35,000. Nice. Okay, good. Then to close the dividend account, I have to do what?
Debit retained earnings and credit dividend.
Good. Now, guys, if you're starting to get deja vu here and you're saying, what's, Lord doing to me here? This is the test. This is the basic blocking and tackling that I want you to know. And we're taking, remember I said the weightlifting approach here. We're going to repeat till this stuff is just basic to us, because it is basic. so that you have the basic, and then we're going to build on that. Okay, so we're really in that boot camp part of the class here, and in boot camp you keep repeating things, right? Okay, all right, good. What amount will be posted the retained earnings in the process of closing the income summary account? Well, it looks like we got some work to do for this one, right? Because they're giving us all kinds of different things that we are going to have to close here, right? Okay, so who wants to start me out? What's the first thing you want to close?
Revenue.
Okay, go for it.
Okay, so we want to debit revenue and credit income summary.
Okay, how much?
29,000.
Beautiful. That closes the revenue, right? And I'm going to go ahead just to, I don't know that you have to do this for your, when you're working on a question like this on your exam. It won't hurt you to do this. I like to do it just for teaching purposes, though. Credit to 29,000, post it. So the balance becomes what? 29,000. I guess you probably, yeah, I would go ahead and tee it up if I'm taking the exam. Okay, good. How about the expense accounts? Do them one at a time.
You credit the expense account.
Do them one at a time. What's the first one you want me to credit? Do them one at a time.
Okay, the rent expense.
Okay. Rent expense, 3,600. Good. Now which one?
Salaries expense.
Salary expense, what is it, 7,200?
Yes.
Good. Okay, now which one?
Insurance.
Okay. What's that one? 920?
Correct.
Okay, good. Now what?
The last one is depreciation expense.
Depreciation expense.
500.
Okay, good. Anything else?
No.
Right. We don't close accumulated depreciation. It's a contra asset that appears on the balance sheet, right? Okay, good. So when you add all those up, you get what? When you add these expenses up, you get what?
12,200.
12,200?
Yes.
Okay. And so I know I have to what? Debit something for 12,200. What do you want to debit for 12,200?
Sorry, Professor. I think it's 12,220.
Yep.
12,220, you say?
Yes.
Like that? Yes?
Yes.
Okay, what do you want me, what account? I have a debit here. I need to write an account.
Credit income summary. Or debit income
Debit.
summary, sorry.
Okay.
Debit it.
Income summary. 12,220.
Yes.
Okay, good. And what becomes the balance in income summary now?
16,780.
16,780, you say?
Yes.
Like that? Okay. And then what do you want me to do with this? Help! Help! What do you want me to do with this?
We need to credit that.
Credit retained earnings.
Credit 16,780 here. Credit it. You want a credit income summary?
I want income summary to be debited and retained earnings to be credited.
Income summary going to have to be debited 16,780 and retained earnings gets the credit, don't they?
Yes.
So now this is zeroed out and my net income is in my retained earnings?
Yes.
Okay. So income summary, what amount will be posted to retain earnings in the process of closing the income summary account? Did we credit it for 16,780?
Yes.
Can you get there without doing everything we just did? I say not.
No.
Okay.
So you say that net income is the same as retained earnings?
I didn't say that.
No. Okay.
I said that revenue, why do they call it the income summary? I mean, why do they call it the income statement? Why do we call this the income statement?
Because we get the net income.
Because it shows us net income.
Yeah. Revenue.
And revenue of 29,000 less expenses of 12,220, somebody told me.
Yes.
Equals net income of 16,780. And then when I calculate retained earnings, it's beginning balance. Add net income, which my net income would go there. Subtract what?
Dividends.
Dividend gives me ending balance. So essentially, if I'm looking at a company's retained earnings, I'm simply, when I say if I'm looking at their retained earnings, if I'm auditing retained earnings, it's the easiest thing in the world for me to audit because it's whatever has been the income for the entire life of the company minus the dividends for the entire life of the company equals the retained earnings, right? Okay, because that retained earning balance will carry forward to the next year to be the beginning balance. Now, that ignores some very fairly, I'd say very rare situations. There's something called a quasi reorganization in which the accounting standards will allow a company who's been taking losses year after year, and they have this negative retained earnings and they want to zero it out and get a fresh start. Under a quasi reorganization, they'll let me take certain amounts of paid-in capital to zero out my retained earnings. So if I have some paid-in capital, I could basically zero out my retained earnings and get sort of a fresh start, and I'll go from zero, and then hopefully I'll have net positive net income going forward, and I'll be able to show some positive net incomes. If a company doesn't have paid-in capital in excess of par, sometimes what they'll let them do is reduce the par value of their stock, thus creating enough paid-in capital to then go ahead and zero out retained earnings. Those are really kind of beyond the scope of something we would do in this class. The only other thing about retained earnings that if I'm auditing, I'd be concerned about is if there has been something called an appropriation of retained earnings. Appropriation of retained earnings basically says that I'm setting aside part of my retained earnings, say for a large capital purchase. It's simply a reclassification from unappropriated to appropriated to show shareholders that I'm actually saving that retained earnings. It's not really available for dividends, but that's really all beyond the scope of what we're learning here. Right now, we just need to understand retained earnings is the history of the income minus the dividends. If you if you pay out a dividend, you haven't retained your earning. You paid it out in the form of capital. So we subtract that from the retained earning. You just think about it as the piggy bank. Okay.
Okay.
Question? Temporary accounts include all of the following. I think this is an in-practice midterm teaching moment. I don't know that I've told you this before, okay? So you might want to write this down somewhere, that any account that we turn back to zero at the end of the year is a temporary account. If we turn an account back to zero at the end of the year, it's a temporary account. So let me ask you something. Is revenue a temporary account?
Yes.
Yeah, because we turn it back to zero, right? Don't we turn it back to zero at the end of the year?
Yes.
Yes.
Good. Is our expenses a temporary account?
Yes.
Yes.
Yeah, because we turn it back to zero. Good. Are dividends a temporary account?
Yes.
Yes, because we turn them back to zero. Okay. Is any asset, liability, or stockholders' equity a temporary account?
No.
No, they are not, because what? Those balances carry forward, right? Remember when we went from year one to year two? You think of your balance sheet as your wallet. Your cash doesn't disappear overnight. If you owed somebody money, it doesn't disappear overnight, right? You still owe them that next morning when the year turns to the next year, right? Okay. So our balance sheet accounts are called permanent accounts as opposed to temporary accounts because their balances carry forward. So our temporary accounts are any accounts we turn to zero, which are going to be what? Our revenue, our expenses, and our dividends. Our permanent accounts are any balance sheet account. Any balance sheet account is automatically considered a permanent account. Question? Okay, good. So temporary accounts will include all of the following except, well, revenue is a temporary account. Are dividends a temporary account?
Yes.
Yeah.
Turn back to zero. Expense, yeah. Okay, I didn't mention it. Income summary turns to zero, right? After we put the net income and the retained earnings, it says,
Yep.
thank you. And now it's in retained earnings and it's back to zero, right?
Yep.
So income summary is temporary. Prepaid rent is what kind of account?
Permanent.
Permanent, it is an asset, isn't it?
An asset.
Yes.
Therefore, it is permanent. Good. Okay. Permanent accounts include all of the following except accumulated depreciation appears where?
Balance sheet.
Good. On the balance sheet. Prepaid insurance is an asset, liability?
Asset.
It's an asset.
Asset appears on the balance sheet. Unearned revenue is a
Liability.
Liability.
liability, so it goes on the balance sheet, right? Accounts receivable is an
Asset.
asset. Good, goes on the balance sheet. Depreciation expense goes where?
Temporary account on the
It
income
goes
statement.
on the income statement. Good, therefore it is a temporary account. Good. Okay. Okay. This is red for no reason here, guys. So just to, I guess, give some color to the presentation here. Okay. So use the following information to tell me which of these are current assets. Current assets are assets that will be used up in how long?
A year.
A life cycle.
Well, technically it's the life cycle of the company, or 1 year, whichever is longer. Okay. But for this class, we're just going to use the rule of thumb 1 year. Okay. Yep. So cash will be used up in 1 year.
Yes.
Okay. Accounts receivable. Yeah, we think we're going to collect those within a year, liquidate them within a year.
Yep.
Yes.
Okay. Prepaid insurance, even though, hey, you could have a 2-year policy, but the rule of thumb is that that's a current. Okay. Equipment.
No.
You can use up your equipment in a year? No.
No.
Accumulated depreciation? No. Land?
No.
Do we have any other assets here?
No.
Okay, so we're only looking at the assets. So 23 plus 16 plus 6,600, I guess, equals 45,600.
Yeah.
Okay. Okay, good. How about the?
Oh, sorry, for that one, could we talk about accumulated depreciation one more time?
Yeah.
I think you mentioned earlier on that accumulated depreciation will only show up on the balance sheet, right? So it's not
Correct.
technically like an asset or anything. It just shows up on the balance sheet.
It's a contra asset. It's a
Contra asset. Okay. Okay.
Yeah, it's against. So if we were to make a balance sheet right now, okay, we'd have cash of, what is it, 23?
Yeah.
Is this thing really going to crash on me? We'd have cash at 23,000.
Yes.
We'd have accounts receivable. Somebody want to call those numbers out to me. What?
16,000.
Okay. We'd have what?
Prepaid insurance at 6.6.
Prepaid insurance of 6,600, you say?
Yep.
Okay. And then we'd have what?
Land.
Okay.
Or equipment or whatever. Land,
Well,
yeah.
either way, it doesn't matter. Equipment.
Okay. Yeah, equipment is the next one. It's 100K.
And we probably showed something like that, 100,000 less accumulated depreciation. Sometimes you'll see they'll show the equipment net of accumulated depreciation, and you'll have to go to a footnote to get what the accumulated depreciation is. Both of these are fine presentations, though. You don't have to do the subtraction right on the face. I'm doing it right on the face of my balance sheet here, which is 50,000, which gives me the equipment net of accumulated depreciation of 50,000 here.
Yeah, just 100K minus 50K, right?
Yeah.
Okay.
And then I would report the land. The land is what?
Land is 95.
95,000. And then I total all of those assets, whatever that is, I total all those up and I report the total assets, okay? But I would just sit here like this. And again, like I said, you could show that this part sort of in a footnote and just show the equipment net of accumulated depreciation, or you could do it right on the face of the income, balance sheet.
Okay, cool. And then I kind of have like a dumb one too, because like accumulated depreciation, since it just shows on the balance sheet, right? How does it make the balance sheet balanced, right? Because it looks like you're only taking the 50K out of the asset, but you're not taking the 50K out of the expense account, right?
Yes, I do. I take it out of the expense account every year as that asset depreciates. So
okay,
I had an asset that was depreciating, say 10,000 a year. Then year one, I would debit depreciation expense. What did I say? 10,000 a year. and I would credit accumulated depreciation 10,000. And I would do that in year 1. And if this was my accumulated depreciation, there'd be 10,000 there now. And then I would do that same journal entry because it's depreciating, 10,000 a year. I do that in year 2. I do that in year 3. I do that in year 4. I do that in year 5. Same journal entry every year. Year 1, year 2, year 3, year 4, year 5.
And you're debiting credit. Or sorry, that doesn't make sense. You're debiting the expense account of A/D, accumulated depreciation, 10,000 every year.
Well, I'm debiting depreciation expense each year. And at the end of each year, I turn that back to 0 because all expense accounts go back to 0. My accumulated depreciation, I don't turn it back to 0. So at the end of 5 years, it would have accumulated 5 years worth, 1, 2, 3, 4, 5 of these credits, right? That get made every year.
Right.
And so at the end of the 5th year, my accumulated depreciation has how much in it?
50K.
Which I report right here.
Oh, okay. I see, and it's on the assets. Okay.
I just reported contra. There is no asset side. I reported under my assets, under right next to the equipment as a subtract.
Got it. Oh, okay, that makes sense. Thanks for explaining that. I was always curious to how they did that.
Well, we haven't studied that yet, to be honest with you. We're going to get to that more in chapter 8. But since you asked,
appreciate the preview.
Now we've got time to go ahead and do that. Yeah.
So,
Somebody said so.
So yeah, sorry, I was thinking out loud. I think I'll wait till chapter 8 to ask this question because I don't think it applies right now.
Go ahead and ask it now. What do you want me to sit here lame here all night wondering what that question was?
Oh, I wouldn't do that to you. So I'm thinking about FASB or GAAP if they have a standard for a depreciation schedule. Like if I see an asset that's 100 grand and accumulated depreciation of 50 and 10,000 taken this year, can I assume that that person has had that, or that business has had that asset for 5 years, or is that not a safe assumption?
Well, I mean, unless you're getting down into the detailed books and records of every company, you really wouldn't be able to determine that, right? I mean, all you know is they have equipment that they paid 100,000. They have accumulated depreciation of 50,000, but they're not going to share their depreciation schedule with you in their financial reports, right?
So the schedule can vary. It's not always 10% each year. It's
correct.
Depends on how the entity decides to do it.
Well, it's based on, a reasonable estimate that they would have to satisfy their auditors if they had equipment of 100,000 and they said that equipment had a 10-year life, that would be 10,000 per year that they think they're going to take on depreciation, right?
So they determine based on the fact that they are industry experts, they determine what the usable life is. There's no like FASB standard for usable life for a building, for example.
No, there is not. And they would have to convince their auditors that they have a reasonable period of time for that life. In other words, if I go and I look and you show me, a piece of junk equipment and say, well, it's got a 10-year life, I'm going to say, I don't think so. Now, who's right, me or them?
Yeah, I got you.
Nobody knows. That's why in our financial reports, we always put a footnote that warns users of the financial reports that we have estimates in here and that the actual results could differ. And so everyone understands that, hey, they're doing their best. The auditors are doing their best to help them come up with a reasonable, rational way for determining the depreciation, but it's not perfect. And no, there is no standard that says this is how long a building should last. It just has to be reasonable.
Understood. Thank you.
Yeah. Mm-hmm. Okay, good. Let's go ahead then and let's take a look at the next question. And the next question wanted to know, well, what is the current ratio? So current ratio is calculated how? It's a ratio.
Current assets divided by current liabilities.
Good. Current assets divided by current liabilities. We know that our current assets, because it's the same table of information. So from the previous question, we know that the current assets equal what? 45,600? Right? Same table of information. Yes. So now we just got to figure out our current liabilities, which are those that will have to be what? Paid in for our purposes 1 year, right? So how about accounts payable? Is that a current asset?
No.
I mean, current
liability, yes.
Current liability, yeah. You know, interest payable, I don't know. You know, these fools should make it more clear to us whether that interest is going to be payable in 1 year or not. But I think to get this answer correct, you had to pick up the current interest payable as a current liability. How about unearned revenue?
Yes, liability.
Yeah, typically we think of unearned revenue as current. Okay, good. Long term, that's telling you it's not current. And then common stock and retained earnings are stockholders' equity accounts, aren't they?
Yes.
So if we add this up, we get what?
24,500.
24,400, you say?
Yes.
Yeah?
Yeah.
Okay. So current asset divided by current liability, 24,400 divided into 45.6 should give us the answer here, 1.87.
1.868, yeah, 1.887.
Okay, good. Okay. All right, good. And that annoying red means nothing here. Okay, number 12. Unearned revenues are, let's see. I'm looking at all these words, but we know it's a liability, isn't it? I don't have to even read the rest of that. Right? Now, it's a liability that, you know, analysts might look at favorably because it means I'm booked into business in the future, but it is a liability. Prepaid expenses are, and I look, and it's what? It's an asset for prepayments for services in the future?
Yeah.
Or it'll cover future expenses, and have to be service, could be insurance, right? For example. A company's formal promise to pay is a note payable.
Yes.
Okay. Wiley Consulting purchased $7,000 worth of supplies and paid cash immediately. Which of the following is the correct journal entry? If I pay cash, should I debit cash or credit cash?
Credit cash.
I credit cash. When I pay cash, my cash goes down. So I quickly look at the choices, and there is only one in which cash is credited, right?
Yes.
So C has to be the answer. And of course, if I'm buying supplies, then I'll debit supplies.
Yes.
J. Brown Consulting paid cash. If I paid cash, should I debit cash or credit cash?
Credit cash.
credit cash. So B cannot be correct. C cannot be correct. D cannot be correct. E cannot be correct. I have to credit cash and debit utility expenses.
Yes.
Yes.
16, on July 1st, Plum Company paid $7,500 for management services to be performed over a 2-year period. Plum follows a policy of recording all prepaid expenses to asset accounts at the time of the cash payment. If I pay cash, should I debit cash or credit cash?
Credit cash.
Okay, so A cannot be correct. B's got a chance. C's got a chance. D cannot be correct. And E cannot be correct. So I'm doing this, guys, because what? Even if you were stuck, you could turn this into a 50-50 proposition, couldn't you?
Yeah.
Just by knowing how to handle the cash. Okay. And what? Since I'm paying in what? I'm paying to be performed over a 2-year period. I'm paying what?
Prepaid.
Prepaid expense. That has to go to my what? To my prepaid account?
Prepaid expense account, yeah.
See?
Yes. And that would be an asset, correct?
Correct. So it has the word prepaid in front of it. Okay. Okay, good. An account linked with another account and the opposite, the normal balance is a contra. Contra means opposite. I mean, it's almost turned this into a Spanish class now. Contra means what? Against, opposite.
Yes.
Okay. And so that's why I keep saying that accumulated depreciation. So I'm going to scroll back up since we took the time to write that. Might as well take advantage of it. You know, that's why I'm calling accumulated depreciation a contra asset account. It's against the asset accounts so that we show them net of contra accounts. Okay. Where are we?
18.
18. Okay. J. Brown Consulting paid $2,500 cash for a 5-month insurance policy, which begins on December 1st. Given the choices below, determine the journal entry that Brown Consulting would make to record this transaction. If I pay cash, should I debit cash or credit cash?
Credit cash.
Credit cash. So let's see. A's got a shot. B is out. What? Talking to me? B is out. C is out. E is out because there's no cash involved. So we're down to what? Either A or D. Okay. And again, if I'm paying it for a 5-month policy, which begins on December 1st, then that means that what?
It's
I'm
prepaid.
paying that in advance, right?
Yes.
So it's an asset account.
It's an asset account, yeah.
Correct.
Okay. Okay, good. The amount of depreciation recorded against an asset over the entire time the asset has been owned is referred to as accumulated depreciation. Guys, I'm not going to scroll back up again, right? That's accumulated depreciation.
Yep.
ABC Catering received $800 cash from a customer. If you receive cash, should you debit it or credit it?
We debit
Debit.
cash.
What?
Debit cash.
Debit cash if I receive cash. So A is out because there's no cash. B has a chance. B has a chance. C has a chance. D has a chance. E is out. So I know I'm gonna have to debit cash, and I'm saying that 800 cash from a customer for crediting catering services to be provided next month. So now they're paying me in advance of me providing the service, right?
Yes.
If I haven't provided the service, have I earned that revenue yet?
No.
No, it's not yet there.
That's an unearned revenue. Good. $21, the company paid. If I pay cash, should I debit cash or credit it?
Credit.
Credit cash. B is out, C is out, D is out. And if I paid a dividend, I debit the dividend, don't I?
Yes.
And E is out. So I have to credit cash, right? Okay. Okay, good. 22, Able Graphics receives a $400 utility bill in the current month's electricity. It is not due until the end of next month, which is when we will pay it. So they haven't paid any cash yet. So should cash be involved in this transaction?
No.
No, they haven't paid. They intend to pay it. So there's no cash yet involved in this, right? Okay. Now, we know that they're going to have what? They're going to have a bill, aren't they? Because they intend to pay it next month.
Yes.
So we know we have to credit a liability, a payable.
Yes.
Yes.
There's only one choice that has me crediting a liability and account payable, which is C.
Yep.
And since they're receiving the bill and they're not going to pay it until next month, that means that they already used up the electricity, right? PG&E doesn't call you and say, man, I'm going to send you a bill because I think next month you're going to use this amount. They've got some, in the old days, somebody would come and read your meter. Now I think they do this all electronically. Although my nephew, I think, still goes around and reads meters. And I don't know, they must be sending them out to some rural area somewhere. He lives in Sacramento. I think he's had to run from cows a couple of times when they've sent him to look at the meters. So, for the most part, they do this electronically, but they don't know how much electricity you use until you've used it, right? Okay, so there's no future economic benefit associated with that. So, and of course, you didn't need to go through all that to know that the correct answer was a credit to the accounts payable, right? Because you're not going to pay that until next week or next month, whatever.
So you debit the expense.
Yeah, because I'm assuming
increase
if
it.
they're sending me a bill for $400, I must have already used that electricity, right? They don't send me a bill before I use electricity. How would they know? I could sit there and say, hey, I may die next month. Don't send me the bill now. At least let me, sleep with the lights on for a little while before you send me the bill, right? Okay. Okay, good. 23. HH Consulting and Design provided 800 of consulting work and 100 of design work to the same client. Now, if I have provided service, can I take the revenue?
Yes.
Yes.
I've provided this work, haven't I?
Yes.
Yeah.
So my revenue should increase.
Correct.
Yes.
How do you increase revenue?
Debit.
Try again.
Credit.
You credit revenue to increase it.
Okay, good. So A is out. Okay, B's got a shot. C's got a shot. D's got a shot. E's got a shot. Okay, so I was only able to get rid of one of these by realizing that I have to credit the revenue, right? Now, if I'm going to bill the customer and I expect to collect it next month, will I be getting any cash on this currently?
No.
No. So C is out and D is out because I don't have any revenue yet, right? Okay. Now, if they're going to pay me later, do I have an asset or a liability?
It's an asset.
I have an asset because they're going to pay me, give me my favorite asset soon in the form of cash. So I have an asset, not a liability. And I don't know why I would even think about debiting a liability here, because how would I reduce a liability unless I owed them some money and they're saying, hey, since you provided me this service, now you don't have to pay me that bill, then maybe I would make that journal entry. But there's nothing in that question to indicate that that was the fact pattern. I'm going to bill them, so I'm going to have what? An account receivable. And all they did here was they've got different types of revenue. And a company may do that. A company may want to keep track of, hey, what was my consulting versus my design revenue? And they may even want to report that out. If you've got a couple of different revenue streams, potential analysts may be interested in understanding the nature of, you know, services, whatever that's providing your revenue. Question? Okay. Let's see. We got a few more questions here. Do you want to take a break right now and then come back and knock these out and see what we got in the second practice midterm? Or you want to finish this one? We'll take a break here. I think an hour and a half is kind of a lot of time when you're going through something like this. So let's go ahead. Let's take a quick break. We'll do 15 minutes, you know, about 15 minutes. We'll make it 7:45 and we will come back and pick up here. Okay.
Okay.
Thanks, guys. I'm going to pause the recording. Somebody remind me to hit unpause when we come back. Resume the recording, and we're going to continue on here with number 24. And you can kind of see the theme continues here. Now you see why I'm telling you the journal entries slide and the year 1, year 2 example are critical, because you can kind of see that that theme keeps repeating itself. So here, on January 1st, the company purchased a 5-year insurance policy for $1,800 with coverage starting immediately. The purchase was recorded in the prepaid insurance account, and the company records adjustments only at the year end. Remember, and that's chapter 3, adjustments. When your tie is crooked, what do? You adjust it to get it straight, right? So if we bought an insurance policy for $1,800, we of course would have debited the prepaid $1,800 and credited the cash, right? Okay. But then what? At the end of 1 year now, 1/5 of that, assuming it was a 5-year policy, 1/5 of that has expired. So we would take the 1,800, they're multiplying it by 1/5, whatever, divided by 5, that's $360 per year. So each year for the next 5 years, we'll debit depreciation expense and credit the prepaid insurance account, right?
Insurance expense.
Debit insurance expense, credit the prepaid insurance account each year for the next 5 years.
Yes.
Okay. Okay, good. Number 25, unearned revenue is a liability. I think you're getting used to that now. We've said that a number of times. Which of the following asset is not depreciated? Land, we don't depreciate. Okay, right? Land, where I am in Hayward, this land once belonged to the Ohlone Indians, right? Okay, I don't know, San Jose, maybe there's some other tribes, but up in the East Bay, the Ohlone Indians were the dominant tribe. And so this land will someday belong to somebody else, unless the land falls off the edge of the earth And at which time, when that disaster happened, you record the loss at that time, right? But we don't say, and the land is depreciating, okay? All of these other assets will have what? Will have finite life. It will depreciate. Okay. Okay, good. What happens? On May 1st, seller's company received $1,500 from Franco Marcaselli for a marketing campaign effective from May 1st to April 30th of the following year. Okay, so this is what? This is a 12-month deal, isn't it? Okay, so what happens? On May 1st, 5/1, we're going to go ahead and debit cash for $1,500 and credit what?
Unearned revenue.
Yeah, upon receiving it, we're going to quickly credit unearned revenue just because we got to keep track of that cash. So we got to debit the cash, credit the unearned revenue. Good. And it's going to be a 12-month period. It's going to run into the next year. The cash received was recorded. Okay, they're telling me it's under fee on December 31st. 1,000 of the fees have been earned. Okay, so I thought when I first looked at this, they were going to make us calculate this, but they're telling us 1,000 has been earned, right?
Mm-hmm.
1,000 has been earned. They made that easy. I don't have to write the journal entry. You debit the unearned, you credit the earned, because they told us 1,000 was earned. I thought they were going to make me take the 1,500 divided by 12 and come up with how much maybe had been earned, but that question didn't get into all that detail, right?
Yes.
28, okay, company pays each of its 2 office employees each Friday at a rate of $100 per day for a 5-day week that begins on Monday. If the company accounting period ends on Tuesday and the employees work both Monday and Tuesday, the month end adjusting entry. So I'm just going to assume a 31-day month here. Monday is the 30th. Tuesday is the 31st. They tell me that these 2 employees, right, each earns what, 100 per day?
Yes.
Okay, so 2 employees, 100 per day for each of them. That means that what, by the end of the month, that's the 31st, they've earned 400, haven't they?
Yes.
Total. Okay, so I debit what? Salary expense and credit the salary payable for 400 because apparently I'm not going to pay them until maybe the end of the week on Friday or something. They tell me there's amount still unpaid though, right? The end of the month.
Yes.
Okay. Good. Then what? Then we come over and a company pays its 2 employees, pays its employees, it's not 2 here, 4,000 each Friday, which amounts to 800 per day for the 5-day work week that begins on Monday. The monthly accounting period ends on Tuesday and the employees work through Thursday. The amount of salaries earned but unpaid at the end of the month. So the work week begins on what? Monday.
Mm-hmm.
And the employees work Monday, Tuesday, Wednesday. Monday, Tuesday, let me space that out a little better. Wednesday, Thursday, I guess they don't work on Friday, I guess, according to this.
We just need to subtract 800 to the 4,000.
Don't get cocky. Okay, so we have what? We have 800 on Monday, 800 on Tuesday, 800 on Wednesday, and 800 on Thursday, right? Okay, so 800 times the 4 days is 3,200. Okay, I'm kind of kidding about not getting coffee, but then again, I'm kind of not, because it's easy to make a mistake. I like to write things out like that. Okay. Okay, good. The adjusting entry to record salaries due to employee for services provided but unpaid. We already saw that with a numerical example. Debit the salary expense, credit the salaries pay up bill. And that was sort of at the end of chapter, what, 3 that we had those questions, right? About payroll. Okay, questions? Another practice midterm. You want to go through it together? You want me to give you time to look at it on your own? Your call.
Together, please.
Okay. Okay, good. All right, good. Number 1, debits do what? Debits increase assets, decrease liabilities, don't they? Don't ask me to go through it together and then sit here and go radio silent on me here. I'm not going to talk to myself. Debits do what?
Increase assets. Decrease
No,
liabilities.
They decrease liabilities and they increase assets, right? Look, guys, if you don't want to do it, then let's not do it. I mean, I want to sit here and do it just for fun. I don't
I'm
need
confused by the phrasing of this question. Is it supposed to be like we're setting up the equation verbally for this question?
Not the equation, the slide.
It's what did debits do? They increase assets and they decrease liabilities.
Correct.
And that's from that chapter 2 slide you mentioned, right?
Okay. Look, guys, you should know this already. I mean, I was thinking you guys were just going to tear me up and just overwhelm me with the answer to this question. I mean, if you're having trouble with this, I'm wondering what you're doing in between classes here. Debits increase assets and decrease liabilities. And you shouldn't have to ask me what slide that is. Right?
Yes.
Right.
Yes.
Okay. A credit to a liability account does what?
Increase.
Increases the liability amount
Yes.
owed to creditors. Okay. All right. 3. On January 14th, a company purchased supplies of 900 on account. The entry to record this purchase will include, well, if I purchase it on account, is a supply an asset?
Yes.
Yes.
Yeah.
So to increase that asset, I have to debit supply 900.
Yes.
And if it's on account, I have to credit what?
Accounts payable.
Good. Accounts payable for 900. Okay, good. So that's choice A. Okay, good. Huh? Number 4, at January 31st, 2020, the balance on the company's supply account was 780. Okay, now when I see something like that,
Base.
you could do base on that if you want to. I was going to do a T account, but you could still use, you don't have to limit base to, you know, stockholders' equity. So to retain earnings. So let's go ahead and let's do it. So January 31st, 2020, the balance was 780. So that's the beginning balance, right?
Yes.
Okay, even though they're telling me it's 131, well, 131 is February 1st's beginning balance, right? So that's 780. Okay, good. Then they tell me Bigelow purchased supplies of 900. So this is the supplies account. So we know what account we're analyzing here. So if I purchase supplies, should I add that purchase?
Yes,
Yeah.
Okay, so that's going to be what, 900?
correct.
Correct.
Good. And used supplies of 1150.
So you
Mhm.
subtract that.
So you would subtract that, yeah. And that gives me the correct answer here. The ending balance is 530.
Yes.
Now, you'd have to know that, you know, the supplies account would have had a beginning debit balance, right?
Yeah.
That 780. So that was sort of why I kind of defaulted a little bit to the T approach, which is 780. And then when you purchase the supplies, you do what?
You debit.
You debit it for 9, and then you use supplies, you credit it for 1500. So then you could look at that whole thing and realize, okay, I would have ended up with the 530. It's a debit balance, not a credit balance, right?
Yes. Correct.
Okay, good. A couple different ways to look at that one.
Why is the base account there legal? Because I thought base was for retained earnings, right? So it's not like a net income question.
Any account in the world has a beginning balance. You add something to it, you subtract something from it, and you end up with an ending of balance. Every account in the world. Even if you add 0, subtract 0, then you'd have a 0 add and a 0 subtract, but you'd still have a beginning and an ending balance, right?
I see you. Yeah. Okay.
Every account in the world does that. I use it for retained earnings because I'm trying to get you the feeling of how retained earnings connects up to the income statement. So I use it a lot for that, but you could use it for any account.
Okay. That makes sense.
Yeah. Number 5, December 1st, 2020, company account receivable balance was 1,300. We had credit sales of 7,400, collected accounts receivable of 6. Let's do it again. Now we'll use base for accounts receivable. So beginning balance was how much?
1,300.
1,300. Then what? Then I debit accounts receivable for 7,400, credit sales for 7,400. Okay, to increase an asset account, I debit it. So I add sales for 7,400. I'm going to make CPAs out of you guys yet. Okay. And then when I collect on the accounts receivable, I do what? I debit cash. 6,000. I credit the account receivable, right? Is I turn my second favorite asset, accounts receivable, into my favorite asset, cash. So collections are subtract from the accounts receivable, aren't they?
Yes.
Cash collections of 6,000. And so the ending balance here is going to be, and again, you know, you'd have to make sure you were comfortable with, you know, the fact that the accounts receivable started with a $1,300 balance in there, debited it for 74, credited it for 6, and I end up with a debit balance here of what, 2,700?
Yes.
I'm not in love with these questions that throw the debit and credit, but you should know, you know, how the debits and credits work at this point in terms of increasing, decreasing accounts and how you end up with a debit or credit balance. Okay. All right. Accounts payable. Good. We're getting practice with this base thing. Let's do it again. BASE, right? Accounts payable had a beginning balance of what?
50,000.
50 grand. During the month, the company made credit purchases of 35,000. So when I have credit purchases of 35,000, they don't tell me what, but I'll just assume it's supplies. So okay. I don't need that for this question. They would have credited accounts payable for 35,000 for credit purchases. That's that add. Then they made what? Payments of 48. Okay. So when I make a payment, I'm going to debit the account payable for 48. I'm going to credit the cash for 48,000. So that reduces my accounts payable. And then I end up with an ending balance here of what, 37,000?
Yep.
Okay. If you want to look at it from the standpoint of a T account, accounts payable, started out with this 50,000 balance, just looking at the balance. And then I went ahead and I did what? I credited it for 35,000, debited it for what? 48,000. And that's how I ended up with the 37,000 balance.
Yep.
Okay, so you could do it a couple different ways. Make the journal entry, post it. If you're comfortable using base now for accounts that you know, aren't retained earnings, you could do that. Okay. On July 7th, 2020, a company performed cash services of 1,900. If I perform the services, can I credit revenue?
Yes.
Okay, so when they ask you and they give you half a journal entry, do not get tricked into going in and trying to figure out half a journal entry. Do the whole journal entry. So if I provided the service in exchange for cash, will my cash increase?
Yeah, correct.
If my cash increases, did I debit cash?
I debit cash, yeah.
Okay, so yeah. See how easy these questions are when you do the whole journal entry and then just compare it to the choices. If you sit there and you try to look at half a journal entry where they're asking you to debit and credit, you get all confused. You make the whole journal entry, you look at the choices, these are easy. Okay. Okay, good. Company purchased equipment for 24 and supplies for 7 for $3,100 cash. Okay, again, do not try to look at half a journal entry and figure it out. Just make the journal entry and then look at the choices. So if I purchase something for cash, should I credit cash or debit cash?
Credit.
Got to credit the cash for 31. And all they're doing to me here is what? Instead of purchasing one type of asset, I purchased two types of asset. I purchased equipment for what? 2,400?
Yep.
And supplies?
700.
Thank you, for 700. Is that the journal entry?
Yes.
Okay. So I didn't debit supplies expense, guys. I debited what? The asset account supplies, right?
Yes.
Wasn't an expense yet because I guess I'm still going to use those supplies. So I debit equipment and I debit supplies, right? Not a supplies expense. I don't debit the expense until I use those up, right? Okay. Okay, good. On August 13th, the company purchased office supplies for 1,700 and equipment, excuse me, for 1,700, office supplies for 3,000. Which of the following is in the standard correctly and in the standard format? Okay, I don't like this question. I guess the answer is D. This is a stupid question, though. You know, there's no law that says you have to put all your debits first and then your credits. You can, you know, put them however you feel them as you go through. You know, this accounting work that we're doing here, even though we're kind of doing it by hand here, would all be automated. So if we're sitting here and, you know, they put it in this way, it has no consequence as far as the accounting system is concerned. Okay. Now, this one is wrong, though. This is wrong. Okay, because you have to put your debits and credits in, correctly, debit on the left, credit on the right. But there's nothing wrong with saying that you would do it A, and it would still be correct as long as you debit and credit the right accounts, right? Okay, so this is kind of a stupid question.
So the answer is it's A and D in a sense. It can be both, right?
Yeah, I mean, if I'm using a automated, what do they call it, general ledger software, the general ledger software isn't going to, turn me into a gas if I don't put the debits and then the credits. I can put the debit and then the credit and then the debit. And as long as they equal, the general ledger software will be satisfied with that journal entry. Now, if I don't equal my debits and credits, the general ledger software will go B-D-D-D, B-D-D-D, and it won't let that journal entry go through saying, you don't know what you're doing. You have not balanced your debits and credits, because debits and credits must balance. And so we call that an input control. And it would not allow that entry to go into the system because we know debits must equal credits. But if I put a debit and then a credit and then a debit and they equal, assuming I've hit the right accounts, of course, which both A and D do, then the system will be fine with that journal entry going through and record that correctly in the software.
Cool. And then, John, sorry to ask you, but for number 5, kind of reading the thing out loud to myself again, it says like Dubois had credit sales of 7,400. When they use the terminology credit sales, that just means like the company did the work, right? So we should call it as revenue. They did the work 7,400, but they haven't received cash payment for it yet, right?
Yeah.
Okay, cool.
Yeah. Credit sales means somebody paid on a credit card or something, I guess.
Okay, cool. Yeah, I find it a little confusing. I don't know why, because it's like credit/debit. So it just confuses my head a little bit, but good to know.
Yeah, credit sales is not telling you debit and credit. It's telling you it was on credit, like a credit card.
Gotcha. Okay, cool. Thank you.
There's really no relationship between the debit card and the credit card and debits and credits in accounting. Just purge that from your mind. I mean, somebody could sit here and try to make an argument for that, but that's somewhat of a waste of time. There is no connection, is the easiest thing. Just knock it out of your head, that there's any relation between the debits and credits that we're talking about here and a debit and a credit card.
Okay.
If it says credit sales, that's like using a credit card for your sales, accepting a credit card for your sale. Like I got my Nordstrom credit card, right? So when I go to Nordstrom and I hand them my Nordstrom credit card, essentially that's credit sales for Nordstrom. They still made the sale because I took away the shoes, didn't I? So I would go ahead and I'd have, Nordstrom would credit sales, debit accounts receivable.
Right. Okay, cool. That makes sense. Thanks for going back.
Yeah, sure. Number 10, a company received a cash advance of 800. What's the journal entry if you receive cash?
Debit cash.
Debit cash, 800. And if I've already provided, if I haven't provided the service, then I'm getting that cash in advance, right?
Unearned revenue.
Good. Good. So is it true that assets increased?
Yes.
I don't have to read anymore. Although always read the choices, guys, when you're doing the exam, because sometimes you might miss a word or something and you'd be willing to bet your firstborn that A is correct. And then, you choose that and you don't read the rest of them. And sometimes I find that when I read the rest of them, I go, it looks like I have 2 right answers. And then I go back up into the question and I realize I missed a word or something. Okay, so always read through all 4 choices. But since I can see the answers A here, I don't have to read those others. That I won't be giving you the answers like that on the exam. You know that, right? Okay. Okay, good. Number 11, company purchased equipment for $2,300 cash. As a result of this event, journal entry to purchase equipment for cash is what?
Debit equipment, 2,300.
Credit.
Credit cash.
Cash, good. 2,300. Purchase equipment for cash, good. Okay, and so you take a look at this one now, and is it true that total assets remain unchanged?
Yes.
Yeah, we just changed one asset for another, right? Good. The procedure of transferring journal entries to the ledger is called posting. First, we record in the journal, then we post, right? And that comes right out of the year 1, year 2 example. Number 13, a company purchased supplies costing $6,000 and debited supplies account for the full amount. Okay, let's just go ahead and make that journal entry. Debited supplies for $6,000. They don't tell me if it's on credit or not, so I'm just going to go ahead and credit cash, okay? I don't know if it's accounts payable or cash, and apparently it's not going to be important for this question. Apparently they're asking me to keep track of the supplies account, aren't they?
Mm-hmm.
Okay, I don't know what they're asking me to do, but let's see. So I'm going to go ahead and I'm going to debit the supplies, post that journal entry, right?
Mm-hmm.
And I have a balance of 7,000. Now they tell me that they had a physical count of the supplies and it revealed that there was only 1,800 left. So they're telling me that the balance shouldn't be 6,000 anymore. It should be what? 1,800, shouldn't it? Okay.
Mm-hmm.
Well, how can I go from 6,000 in an asset account like supplies to 1,800?
You need to credit for 4,200.
Good. Credit the supplies for 4,200. What should I debit? You're right that when I credit the supplies for 4,200, it comes down to 1,800, isn't it?
Expenses?
I'm going to debit supplies expense because apparently 4,200 of those supplies have expired, haven't they? Supply expense.
Yes.
Haven't they expired? I don't have them anymore.
That's what it means by still on hand, is that the rest expired.
Well, look, if I have 1,800 on hand, do I have them?
No, you don't anymore.
You do.
Is this pen on my hand?
Correct. But the 4,200 you don't have anymore.
Yeah. Okay. You asked me if on hand means that I don't have the others anymore. And I'm telling you on hand means what I have.
Yeah.
On hand, which is 1,800.
Yeah.
Right. If I started with 6 and I only have 18 on hand, that means 4,200 are gone, right?
Yeah.
Yeah. Yep. Okay. Okay, good. Number 14. Okay. And guys, part of what I'm doing here is if I hear you say something and it's not quite the way you need to be thinking about it, I'm going to make adjustments to it. So I know that was kind of what you said, but I kind of want you to think it through in the way that I'm talking about. That's going to help you to be more comfortable with this stuff as you go along. Okay. So we're kind of still in that training mode where I'm trying to keep you as pure as I possibly can. Okay, number 14, the balance in the supply account on June 1st was 5,000. Okay, so here's my supplies. Balance is what? 5,000. I purchased 3,000 during the year. So if I purchase 3,000, then I'm going to debit supplies. It's going to come up to 8,000, isn't it?
Yes.
The balance. And the supplies on hand on June 30th that I still have are 3,500. So that means this balance should be what? Not 8,000, but 3,500, right? Because those are what I still have on hand. Okay. So how do you turn an asset from 8,000 to 3,500?
You credit.
Credit 4,500.
I credit it for 4,500. Good. So I know I have to credit supplies for 4,500. Just borrowing the space down here. And what should I debit?
Supplies expense.
Supplies expense, because if I had 8,000, I had 8,000, and now on hand I only have what? 3,500. That means what? 4,500 have expired. They ain't here anymore.
Yes.
Yep.
Okay. So the answer for the appropriate journal entry, which I wrote down here, guys, just because I guess I could have wrote it over there. I don't know why I wrote it down there, but anyway, the correct number is the 4,500, right?
Could you use base approach for that as well?
Yeah. The only thing is, if you use base for that, then you're going to have to use base a little bit differently. But you could use it. So BASE, and they tell me that the beginning balance was
5,000.
5 or 6. You trying to mess me up?
5,000. 6,000 was 13. I don't know if you're doing 13 or 14.
Oh, okay, 14. Okay, I see right here. Okay.
The
So
bank could be
was,
used for both, I'm guessing, correct?
Okay, but we'll just
what
we're doing here, 14, right? So it's 5,000.
Yep.
Okay. And then they tell me that they purchased what?
3,000.
3,000. So if you're going to use base for something like this, you'd have to do a subtotal of 8,000. Okay.
Yep.
And then if they tell me that the ending balance is supposed to be what?
3,500.
3,500 for what's still on hand. Well, how do you get from 8,000 to 3,500? Then I always do a little side calculation. I take the 8,000 minus the 3,500, means I must have subtracted, and that's not I don't want to write it that way because it looks like I'm trying to divide it. That means that I must have subtracted 4,500 to end up with the 8,000.
Yep.
I mean, to end up with the 3,500, excuse me. So you could use it that way too. Okay. When I'm teaching my CPA students, I have them always use base for every question like that. Because on the CPA exam, you are given 4 hours to work some really tough questions, much tougher. These kinds of questions on steroids. And you have to get systematic in how you answer those questions. So I want them to do every single one the same way. You have to be consistent on every single question, how you work them. And you don't have time for all this. And so I have them do it like this every single time for every one of these questions like this, to keep them in a routine so that they can work on the CPA exam. You're going to have 72 multiple choice questions. And then you have 8 task-based simulation, full-blown questions that you have to work in 4 hours. You don't have time to mess around with all this stuff here. On your exam, you have plenty of time. I use base more for the retained earnings, just because I'm just trying to get you to picture the way retained earnings flows over time. But you could use it for these questions too, if you're comfortable with it. Okay. 15, a company received a check for 30,000 on July 1st. If you receive a check, does your cash go up?
Yes.
Yes, it does. When you receive a check, you put it in your bank account, your cash account's going to go up, isn't it?
Yes.
Now, if the check bounces, then you're going to have to make an adjustment and take that back out, but that's a whole nother issue. Okay, but we're just assuming that if you received a check, it's not going to bounce. You deposit in your bank account, your cash going to go up. So if I received a check, should I debit cash?
Yes.
Okay, so I'm going to debit cash. In that cycle now where I keep writing the material for the next question next to the previous one. So let me next to the next one. So I debit cash for what, 30,000?
Yep.
And it represents a 6-month advance for payment. So if it's in advance, have I earned that yet?
No.
No.
So I'm going to credit the unearned. 30,000, good. And that represents what? 6 months advance. So that means if I take 30,000 and divide it by what? 6, I'm going to earn 5,000 per month.
Yes.
Okay. Okay, good. Unearned revenue was credited for the full 30,000. Thank you. Financial statements were prepared July 31st. That's after 1 month, right? So the company should do what? Debit the unearned and credit the revenue?
Yes.
So I've earned that 1 month. Okay, good. Number 16, on June 1st, the prepaid insurance account had a balance of 15.4. What is the proper adjusting entry at June 30th? And if an analysis identifies 5,000 of unexpired, you want to use base or you want to use a T account?
I like the T.
You like the T? Okay. Mr. T. Okay, so this is what? This is my prepaid insurance. And the prepaid insurance, they tell me, has a balance of 15.4.
Yes.
And then they tell me that the correct unexpired amount should be what? 5,000? How do I turn an account that has a balance, an asset account that has a balance of 15.4 into an account that has a balance of 5?
You credit it for
what is it, 10,400?
Yes.
Yeah.
Right. Okay. So if I credit the prepaid, I'm going to write it down here, for 10,400 prepaid insurance, what should I debit?
The expense.
Insurance expense, because what? If I have unexpired amounts of 5, that means 10.4 must have expired, right?
Yeah.
Okay. So debit insurance expense 10.4, credit the prepaid 10.4.
Correct.
You guys getting tired?
No.
Yeah. How many more of these do I have to do?
I believe there's 30 questions.
Okay. The balance in the prepaid rent account before adjustment at the end of the year is 24,000, which represents 3 months rent paid on December 1st. The adjusting entry required on December 31st. If I pay 24,000 in prepaid rent, what journal entry should I make?
Credit prepaid rent.
No. Look, guys, you're not going to get these by watching me do them over and over again.
That's it.
Huh?
It's an asset.
That's 1 month of rent, right?
What
Yes.
journal entry should I make when I prepay the 24,000? Before adjustment, when I got this paid this 24,000.
Oh,
Debit
credit
it.
cash and debit prepaid rent.
Huh?
Yeah, what he said. Debit the prepaid rent.
All right, good. So I would have debited the prepaid 24,000 and credited cash, right?
Right.
4,000. Okay, good. So now prepaid rent has 24,000 is the balance.
Yes.
Yes.
Okay, good. And they tell me that represents what, 3 months?
3 months.
24,000 divided by 3 months
8,000.
equals 8,000 per month. And at December 31st, 1 month has gone by, hasn't it?
Yes.
Okay. So I'll debit rent expense 8,000 and credit the prepaid 8,000.
Yep.
And when I credit the prepaid 8,000, that means I've got what? What's that? 16,000 left.
Yep.
Which represents what? January and February, I presume, of the next year.
Yep.
Yes.
Okay. Okay, good. If a business has received cash in advance, if I receive cash in advance, have I earned it yet?
No.
No. So I know when I receive cash, I'll debit it and I credit what?
Unearned revenue.
Good. Okay, so and then the adjusting entry after the services are performed is what? Debit. Go ahead.
Debit unearned revenue and credit revenue.
Right. Cash, I already took the cash. Then as I provide the service, I debit the unearned and I credit the revenue, right? Hello?
Yep, you were correct.
Right.
Okay, good. Number 20, a company purchased $8,000 worth of supplies on June 2nd, recorded the purchase as an asset. On June 30th, inventory of supplies indicated only 3,000 on hand. Adjusting entry should be made.
Credit supplies for 5,000.
Okay, I have to credit supplies for 5,000, debit the supply expense for 5,000.
Yes.
Are you waiting for like God to come down and tell you something different than what I've shown you 52 times now? I can't see anything here that is, okay, well, since I like football, let's do 22. A team sold season tickets for a 2020 football season for $250,000. A total of 8 games will be played during September, October, November. In September, 3 games were played. The adjusting entry at September 30th, well, if it's 250,000 and I divide that by 8 games, how much is that per game?
31.25K.
$31,250, you say?
Yes.
Yes, sir.
Okay, and if they played what, 3 games in September, 31,250 times 3
93,750.
93,750. Okay, so that means they earned that, right?
Yes.
Okay, so the adjusting journal entry at September 30th is not required. We'll include a debit to cash. No, I took the cash when I got the 250, didn't I?
Yes.
We'll include a debit to unearned ticket revenue and a credit to revenue?
Yes.
18 sold tickets for 250,000. So this one is asking me the balance in the unearned ticket revenue. Okay, so let's just go through this. I'm going to debit cash for 250,000. That's supposed to be an H. And credit unearned, right?
Yes.
Okay, for 250,000. Good. Okay. So since they're asking me to keep track of the Since they're asking me to keep track of the unearned revenue, 250,000, that's the balance, right? Just posting that.
Right.
Right. Okay, good. Then they say in September, 2 games were played. In October, 3 games were played. So that's a total of how many games now?
5.
5 games. And it's 5 games times, and I'm going to speak up to the previous question. It's what, 31,250 per game?
Yes.
Right.
So that means at this point they have earned 31,250 times 5 is
156,250.
$156,250, like that.
Yes.
Okay, so I'm going to debit what?
Unearned revenue.
Unearned revenue.
Unearned revenue. 156,250 and credit revenue, right?
Yep.
Yes.
156,250. And when I debit the unearned 156, that's that right there, 250, I get what?
93,750.
93,750.
Yes.
Okay. Or you could say, well, if it's an 8-game season and 2 games were in September and 2 games were played and 3 in October, that means 2 plus 3 is 5. 8 minus 5 means they have how many games left?
3.
3 games. 3 games times 31,250.
Yep. And you get 93,750.
93,750. And I guess this team didn't make the playoffs. Okay.
Makes sense.
In preparing closing entries, each revenue account is credited? No, each revenue account is debited. Each expense account will be credited? Yep, got to credit each one of those expense accounts, right?
Yes.
The owner's capital account will be debited if there is net income for the period? No, the what? In fact, this whole thing is the owner's equity capital account. It is not impacted here at all. Okay, owner's equity capital accounts like common stock. Retained earnings would be credited, but not owner's equity and the owner's drawing account. So, we haven't really talked about these in these terms, but we know for sure each expense account will be credited. Some of this language we'll pick up later. The entry to close the revenue account involves a debit to revenue for 7,300 and a credit to what?
Income summary.
Income summary for 7,300. Income statement. Net income. The entry to close the expense accounts. Really? Do I have to? Didn't we do this one? Okay, what's the entry to close the expense accounts?
And credit all the expenses.
Credit salary expense, good, 3,000. What else?
Rent.
Credit rent 13.
Credit rent expense. Good. What else?
Advertising.
Credit ad expense. 700 credit insurance supplies expense. One 200 and credit what? Insurance expense. What is it? 100. Okay. What's the total?
5,300.
How much? 2,300?
5,000.
5,300.
5,000.
5,300. Good. What do you want me to debit?
Expenses go to income summary.
Good. Debit income summary. Okay, so is it true that the entry to close the expense accounts will have a debit to income summary? No. Have a credit to rent expense for 1,300?
Yes.
Yeah.
No.
Okay. I mean, guys, not a credit to income summary, a debit, not a debit to salary expense, but a credit. Again, make the whole, the fastest way to answer that question is the long way. Okay. The entry to close income summary to retain earnings. Well, if I were to tee up income summary, and I know that I just debited it for what, 53?
Mm-hmm.
Right there. What would have been the credit?
Right. Revenue 73.
Good. I would have debited revenue for when you get towards the top of the page, it starts messing with you. I would have debited revenue for what, 7,000 was it?
7,300.
7,300.
Right.
And credited the income summary.
Correct.
For 7,300. So I go ahead and I post that. So now the balance in the income summary is how much?
2,000.
2,000, and it wants to go where?
Retained earnings.
Good. So I would credit retained earnings for 2,000 and debit income summary for 2,000 because I have to close out income summary because it's a temporary account. So is it true that the entry to close income summary to retained earnings includes a credit to retain earnings?
Yes.
2,000?
Yeah.
Again, guys, the quickest way to answer these kind of questions is the long way. Okay. Go ahead. What do you want me to do here?
So the base BASE.
Okay. Now, here they tell me owner's equity, right? But they don't give me any information to analyze common stock. So I guess I'm going to have to answer this question purely by analyzing retained earnings, right? I mean, stockholders' equity includes common stock, but they don't tell me anything about stockholders' equity. So I guess I better analyze retained earnings, right?
Right.
Right. Okay. So beginning balance is what?
30,000.
Where'd you get 30,000 from? Beginning balance is how much? Where'd you get 30,000 from?
0.
No, where'd you get 30? Where'd you get 0 from? What two accounts constitute owner's equity, stockholders' equity? Huh? What two accounts constitute the stockholders' equity?
Common stock and retained earnings.
Okay, common stock, retained earnings. Do they tell me anything about common stock in this question?
No.
So I guess I better do what I can to analyze retained earnings, right?
Yes.
Okay. So what's the beginning balance then in the retained earnings?
30.
Why do you keep saying 30? Where are you getting that number from?
2,000.
2,000.
Okay. I'm going to ask again. Owner's equity is constituted of what two accounts?
Common stock and retained earnings.
Do they tell me anything about common stock?
No.
So if they don't tell me anything about common stock, what am I left with?
Retained earnings.
So what's the beginning balance in retained earnings?
36,000.
Good. They didn't tell me anything about common stock, so I guess I better analyze the one account that constitutes retained earnings to be able to answer this, right?
I think your cursor is on top of the number.
Yeah, it
So
was
that
covering the 6, so
it's-
people thought it was a 0.
Yeah, it was hard to see. That's why we were saying 30,000.
Oh, okay. It's not covering it on mine. Sorry, guys. Okay. Okay, good. Then what do you want me to do?
Add net income.
2,000?
Yes.
Okay. And what do you want me to subtract?
Dividends, but yeah.
There's no
Subtract
dividends.
dividend, but dividend is what?
Non-existent. 0.
0. Company doesn't have to pay it, right? Good. And now that looks like I'm trying to say that the total is 73,000, which I'm not. So let's just put it there. So what's the ending balance?
57.
57,000?
What?
Huh?
No, 30, sorry,
38.
38.
38,000.
38,000?
Yes.
That's 73. I'm not trying to. That's 73. Is pretend it's not there. Okay.
Yep.
Okay, good. Okay, one more time for these facts. And if the company, oh, it's a different set of facts. Okay, so if the company had retained earnings of 50, and this time my add is actually what?
We subtract.
A loss, so I actually subtract my add, right? Which usually my add is my net income, but since it's a loss, I have to subtract it. And then they made the incredibly poor decision to pay a dividend of 13 in the year that they had lost. So I subtract the dividend of what? 13,000? And maybe it's a tightly held corporation and they only have one shareholder and they needed to take something out, so they took out the 13. I guess it wouldn't be that weird of a thing. So now the ending balance is what, 30,500?
Yes.
Correct. Yeah.
Good. Whew. Yay. Okay. Question.
Quick question on the owner's equity question. So owner's equity does not mean common stock. And it just like owner's equity, like that terminology, is that pretty common in like accounting terms, I guess?
Owner's equity is kind of getting away from corporate structure that we're pretty much dealing with in this class and saying we have, say, sole proprietorship. And so when I put money, let's say, into the corporation, into the company now, it's not a corporation, I would debit cash, say I put 10,000 in, but there is no common stock for me to credit. So I would go ahead and I would credit owner's equity.
Because there's no stock.
Right.
Okay, I see. So that's
for 10,000. And then the term owner's equity would really, the word owner's equity would really replace retained earnings even in that case, because retained earnings really is a corporate structure. So you'd actually take that income and add it straight to the owner's equity.
Gotcha.
So instead of debiting retained earnings, crediting retained earnings at the end for a positive net income, you would credit owner's equity.
Okay, cool.
But I'm saying to you, if you see owner's equity, just think of stockholders' equity. And in our class, stockholders' equity right now is only common stock and retained earnings.
Gotcha. Okay, cool. Sounds good. And then like a follow-up to that, sorry. Kind of just thinking about our project where we have to look into like company's 10K. Just a hypothetical one. I haven't really done it yet, but hypothetically speaking, let's say if a company's cash balance was really strong, but the retained earnings, oh shoot, would you see retained earnings on a 10K?
Yeah.
You would, right?
Yeah.
It would be on the balance sheet. Okay, yeah. So let's say the retained earnings was like very low. That's not a good company, is it? Because retained earnings is is like whatever you had like from the past beginning of time, right? Beginning balance versus net income. So if you have a very low retained earnings, that means you're not really making any money, right?
To me, what that would indicate is that a company has a high amount of non-cash expenses. So I'd have to understand what was the nature of those expenses. For example, if a company has something called stock options that they're offering their employees, then they'd have to take expenses for those stock options, okay? But they don't use up any cash, because what'll happen is eventually the employees will be able to exercise those stock options, and there'll actually be more cash infusion into the company. So I would say, depends, not necessarily that it's not a good company if it has a good cash position but negative retained earnings, because they're taking expenses against revenue.
The options.
Yeah. You know, they're taking expenses against revenue for those options. And then another potential thing could be maybe there's a fairly significant amount of unearned revenue. So they're already receiving some cash, but they haven't been able to take those as revenues yet for various reasons, because they need to start providing those services. So I would think that you would be better served to look at something that we haven't talked about yet, which is the statement of cash flows.
Okay.
And what the statement of cash flows would do is show an add back to those presumably net losses that they've been taking. Because they end up with a negative retained earnings, you said, and I doubt they're paying out dividends. So if they're having a negative retained earnings, that's been generated primarily by, accrue losses. But if you looked at a statement of cash flows, for example, for those stock options, they would add that back to the net loss. For the unearned revenue, they would add those increases in unearned revenue back to that net loss. And you actually would probably see a pretty nice number of cash provided by operations. So you'd have to take a good look at that statement of cash flows combined with the income statement to really answer that question.
Gotcha. Okay. Cool. Thanks, John. I appreciate the insight.
Sure. We'll talk more about statement of cash flows towards after we get past. This is why I kind of rush us to that first midterm and kind of, you know, being a drill sergeant here for you, because I can have conversations that are contemplated in that question you asked a little easier after we get this freaking midterm out of the way, because I got to test you at least once on this stuff. Then we can start to talk and you're not kind of all worried about an exam, and we can start to play jazz with some of this going forward. So keep those kinds of things in mind, and I think we'll be able to have a more interesting conversation that's not just drilling you on journal entries here as we move forward.
Definitely. That sounds good. And then like kind of in terms of the 10K reporting, you suggest us like to do that after the first midterm, I think you mentioned?
Oh, yeah. Yeah. Don't do it yet. I would wait a while. I think you'll get, there's two things that I think will work for you, because you got to do that guest speaker thing too. So after that first midterm and you watch Danny Wallace's presentation and we start to have more conversation, then I think you're going to find that 10K thing pretty easy. It's going to make more sense to you. Maybe I'll put it that way. We can look back at it after the first midterm.
Mm.
You know, when I say look back at it, because I think I went through what I want you to do with that. I think I did. We'll look at it again after the first midterm.
Okay. Yeah, that sounds good.
Yeah.
Thanks, John.
Yep. Sure. Good question. Anything else? Okay, guys, good work. You know what you got to do, I think. I listed out those documents. I'll put them back up here. I think I still got them up on the whiteboard. So these 10 documents, whatever, you know, look at these, be comfortable with these, have these in front of you when you start your exam. Again, the exam will open. Let's look at that again. If I can figure out where I wrote that. The exam will open 12 a.m. this coming Sunday. We will not convene on Wednesday, the 15th. We will not have a class meeting. Maybe that's when you take your exam, okay? Set that time aside for this class, take your exam, you got it done. We'll reconvene on the 18th, okay? The exam will close hard, 9:59 a.m., and then we'll begin the class, and we'll start the class. Oh, that's 2021. I'm like, what year is that? Looks like some sort of Star Trek year there. Okay, 2021, the exam will, 9/18/2021, the exam will close, and then we'll start out by addressing any, you know, I'll release the grades. In fact, what I'll do for the first half hour of that class, I'll let you review your exam maybe. So still log in at 9:59, but I'll release the scores. I'll let you have some time to look. We can ask any questions, and then we'll jump into chapter 4. Question on that Saturday?
Will you also have office hours on Monday?
Yeah.
Okay, great. Thank
Yeah.
you.
Where am I going to go?
And that's just with the regular Zoom link in the modules?
It's the Zoom link that's labeled office hour.
Okay. Thank
you. And I'll be on campus.
So it'll be on campus, not on Zoom?
No, I'll be on Zoom and I'll be on campus.
Oh, okay. Got it.
Yeah. Because I have a class on. Huh?
are your tests formatted such that they will tell us our scores immediately, or are we gonna have to wait until that
No,
Saturday
you
morning?
have to wait. I don't release the scores till after everyone's taken the exam. I don't release scores. So, hey, I got 100%, you know, let me call my friend Mary and tell her all the answers to all the questions. Yeah.
I apologize for being dense, but where is the Zoom link for your office hours?
Should be in the in Zoom, but let's look. I mean, in what do you call it? Canvas. Yeah, Canvas. But let's look. So let's see. Maybe it's in the syllabus. Office hours via Zoom. Okay. So is it in announcements? No. So it's not there?
Doesn't look like it.
Okay, good. So what I'll do is I'll add it, the link right here, okay? I'll put remote class participation / office hour, and I'll post it right here. Thank you.
Thank you.
Okay. Question? Okay, guys, good work. I will see you on Saturday morning, 9 o'clock. Not this coming, but a week from this Saturday, the 18th. Yeah.
Thank you.
Thank you.
Okay, guys.
Thank you.
Thank you.
Have a good night.
Okay, and I'll post this recording up.
Thank you.
Okay.